Welcome to Quick Talks. This is Andrew here. I'm so excited to be back to bring you topics that you want to hear, and especially to people getting into business, those who want to improve your lifestyle, you want to get better, especially as we are still at the beginning of the year 2023. It is important to change habits, to set expectations, and also create a work plan on how you're going to execute to be better, to do better, and most importantly, to finish stronger than you started. All right, so today we are talking about traditional banks versus credit unions. This is a question many people ask, and I had the same curiosity about the difference. What is a credit union? What do they do? Do they just lend money? Do you have to be a part of this small group of people? What is a credit union? What is a traditional bank? And just to answer that question, traditional banks, I'm gonna say, is one of the the bigger financial institutions. For example, when I talk about like Bank of America, you have the Chase, you have Wells Fargo, you have Citizens, depending on where you are. Some of these big banks, and then we also have the credit unions, and I'm going to break down the difference for you so that you make an informed decision as you choose what you're going to use for your banking needs. Remember, this podcast is geared to people who want to start something. You want to start a business, you want to do better financially. You might be just a stay-home mom, but you've just been doing things the wrong way. You want to start living a financially healthy lifestyle. You want to save money for your kids. You want to have a side business. You want to have money for vacations. So this is for everybody. Quick Start is not just for a few people, but it's for people who are tired of the same old. You want to do things better. This is the place you need to be now. Traditional banks and credit unions are two different types of financial institutions that offer similar services, but with some key differences. Number one, traditional banks are typically for-profit institutions that are owned by shareholders, and they operate to maximize profits for those shareholders. So when we get to the second one, you're going to see the difference. Traditional banks, and I gave examples like Bank of America, Chase, Wells Fargo. These banks are for profit. They are businesses. They are there to make money. They're not there to help you. They don't know you. All they're concerned about is you giving them your money. All right, and they use your money to lend it to other people and also to make money from you. All right, so the traditional banks, they offer a wide range of financial products and services such as checking and savings accounts, loans, credit cards, and investment products. Those are some of the things, especially investment products and the checking accounts, savings accounts. I don't know what kind of savings. They do have savings accounts, but you're not gonna get a lot from their savings accounts. All right, and some of them, actually most big banks, they don't even offer loans, except for some of them will do car loans. They will do mortgages. You want to buy a house, but they won't offer personal loans. Very few of them do that. All right, and they do offer credit cards. Yeah, they do that because they make a lot of money off of credit cards. All right, so traditional banks, or the big banks, they often have a large network of branches and ATMs, and they may offer online and mobile banking services as well. Now, one of the things about traditional banks or the bigger banks, as you probably in your area, if you live especially in America or in other Western countries, or even in emerging economies, these banks are in every 1 mile radius, if not even shorter. You just drive and then you'll see a Bank of America, you'll see a Wells Fargo, you'll see a Citizens Bank. If you live in the Northeast, in every corner, in a grocery stores, They're everywhere. They make it easy for you to, go use your card, get the money anytime you need it. They even have, some of those drive-throughs. You can drive there 24/7. All right. Now, as for the credit unions, these are non-profit institutions that are owned and operated by their members. All right. So credit unions are not there to make profits. That is not why they are formed. They are owned by the member. If you are part of a credit union, you own a share. That is why when you open up an account, they ask you to maybe put down $25, and that is, that is part of your shareholding in the credit union. And what they do whenever they make a profit, they distribute the shares among all the members. All right. So credit unions, they typically offer the same types of financial products and services as traditional banks, but with some differences. For example, credit unions may offer high interest rates on savings accounts and lower interest rates on loans, because they are not focused on maximizing profits for their shareholders. Now, this is the difference. If you put, and I'm saying this first-hand information, I've been working in financial institutions for quite some time, so I know what I'm talking about. I've worked for big banks. I've also worked for credit unions. So the difference is, let's say you put $5,000 in a checking account, rather in a saving account, in a big bank, in a traditional bank. The returns or the profit, the interest that your money makes is way different from what from what your money is going to make in a credit union. Why? Because credit unions are not there to make profits. They're there to help the member benefit, as opposed to the traditional banks. Their mission is to make profits for their shareholders, for the CEOs, get big bonuses, and so on and so forth. All right. So you're going to notice they're going to have, let's say if the big banks are offering 0.05%, the credit union might offer maybe 0.018 or 20 or even more, depending on the credit union and the way it is set up. All right. Additionally, credit unions may have a smaller network of branches and ATMs than traditional banks, but they often offer online banking and mobile services as well. So with technology going up, all these credit unions, they have a very good system, technology, so you can actually access your funds, from anywhere, whether they do have what they call corp, or they have a network. So if your credit union is in the corp network or the cooperative network, you're going to be able to deposit money. Let's say you're in California and you go to a credit union that is part of the cooperative network, you might be able to withdraw money from your checking saving account back in Boston, or even deposit money without a fee. So let's say it's called a California Credit Union and you belong to Massachusetts Credit Union. As long as they're part of the network, you're going to be able, they work together, they can access each other's systems and offer you services. All right. So overall, the choice between a traditional bank and a credit union may come down to personal preference and individual financial needs. Some people may prefer the more personalized service and community focus offered by a credit union. So, it's a matter of preference, but if you ask me, I'm going to tell you, if you do have a credit union, a good one in your area, you're trying to start a business, you're trying to save money, you're trying to, get that personalized service, you want to go for the credit union. They're not after taking your money. They're going to be good on loans. They're going to offer you better loans, better interest rates. You're trying to buy a car, the interest is going to be much lower. Do your research. compare the products, the services, the fees, and interest rates offered by both types of institutions before making a decision. All right, so that's it in a nutshell, the difference between credit unions and traditional banks. But if you are just starting up, you are just getting in business, unless you have a local bank. There's some local banks, that offer very good deals. They have good products that are geared for small businesses or individuals, but it's just a small fraction. But if you wanna choose from the big network of traditional banks and the credit union, I would go with the credit union anytime, because they offer personalized service, better rates, and great service always. All right, I hope this was helpful. Thank you so much for listening to the Quick Talks. This is a podcast that is aimed to motivate, to inspire, and ultimately bring about life change for you, for your business, for your family. Right? If this helped you, go ahead and share with somebody else that you love and you care about. And remember, we're having our Quick Start conference in August 25th to 27th here in Boston, Massachusetts. Do not miss out. If you are outside the country, make sure you register. We do have a new website, quicktalks.com. You can find all the information. It's going to be there, or on our parent company website, quickstart.com. Thank you so much for listening. I'll see you next time right here on the Quick Talks podcast. Thank you.